we had such a dynamic boom during the COVID years and leading up to it that this feels like a really slow market, right?
Yeah.
But nationally speaking, we're back to normal.
Welcome to our Industrial Advisors podcast, Bill Condon and Matt McGregor. We have a 5-minute Friday today talking about, are we at an equilibrium from a market standpoint? And what we mean by that is, are we in a market where it's not really a landlord's market, it's not really a tenant's market, but it's kind of in the middle there, right? So let's talk about that. Where do you think we are from a market standpoint?
Well, nationally speaking, you would say that.
Yeah.
We're at an equilibrium where it's in between the two. It's a kind of in theory, a perfect market. A lot of people would go, what do you mean a perfect market? Its national vacancy rate is up to 6.7%. But if you look at it from a 15-year average, it's right at the average of 6.2. So it's slightly above the average. But we had such a dynamic boom during the COVID years and leading up to it that this feels like a really slow market, right?
Yeah.
But nationally speaking, we're back to normal.
Yeah, and I feel like we're in a really, you bring it to the kind of the local market. To your point, and nationally, we're right there, right around the 15-year average,
Yes.
right? Which is a good place to be. Locally, I feel like there's a good amount of deals that are out there in the marketplace, but there's certain segments of the market where landlords are getting super aggressive, right? And saying, hey, I'm going to go get this deal. And then there's other situations where, depending on the size, the tenants are still having to be aggressive and trying to go secure a space. So depends on the size, but it feels like we're at a really good place in the market for both tenants and landlords.
For Seattle, I would agree. And to your point, it depends on size range.
Yeah.
If you looked at the vacancy overall, you'd say it's leaning toward a tenant's market, right?
Yeah.
But there certainly are size ranges that are sub 3%.
Yeah.
Right. And then we've talked about it ad nauseum, the 1 to 200,000, no question it's a tenant's market.
Right.
Right. So I would say it's through nationally and locally, it's slowing down and the vacancy ticking up from that COVID era, and developers that had to still put the product on because they were underway, they had their construction loans, they had to go. It is now tightening up. So what you saw in an increase is that demand drop off while supply had to continue because developers were already roaring and going and committed.
Yeah.
Now they're pulling back. So you're going to see that tighten up and stabilize and find a new equilibrium.
Yeah. I mean, it's, when I look at it and we're talking numbers here, 6.5% vacant seems like a really good, safe place to be for both sides. You start getting 5 and under, you start becoming more, it's more of a landlord's market. You start inching up towards 8, 9, 10%. The tenants are carrying the weight there.
That's right. I think we'll slow down. I hate this term, but you cold call and you get the people, we're waiting until after the election.
Yeah.
Right. I mean, you get that. It's not this election. It's every presidential election.
Right.
You get that with 4 or 5 months, no matter what side of the fence you're on.
Yeah.
You get that kind of, and so I think the rest of this year is going to just be what it is.
Yeah.
A little bit slow in that because you do have this pent up anxiety on both sides. So I don't think we'll have a ton of different movement until after then. So my guess is our vacancy, both nationally as well as locally, will tick up a little bit, but not a huge change between now and the end of the year.
Yeah. So there we are. We have a really interesting, good market, healthy market that we're in right now, and we'll see how it closes out in the second half of the year.
Happy Friday.
Happy Friday.